So once again, good morning, everyone, and I want to offer up a special thank you to everyone from Dallas Fort Worth who's joining us here today, and thanks to all the members for coming out. I know you probably got more fun things to be doing on a Saturday morning, but I do appreciate everyone who comes out for these events. It means a lot to me. So let's take a look here, and what we want to do today is we want to talk about a little bit longer term trading, position trading. Now, by the way, this is the only slide you're going to see today. We're just going to jump into some charts. I truly love position trading. Now, I'm predominantly a swing trader, okay? But position trading is where I have made the most money ever in trading, and it is one of the more relaxed styles of trading out there. It's nowhere near long-term holds or anything like that. Don't think this is just a buy and hold class, because it's not. You still have to use your technical analysis skills. As a matter of fact, there are a lot of folks who consider position trading nothing more than a swing trade. Okay? And what you're looking for is you're looking for that bigger run, that bigger move. And what we'll talk about is how this can actually help balance you with some of your shorter term trading, and the things that I do to make these really pay off well. Now, what you're looking at here on this screen is you're looking at a chart that I actually position traded. And I'll show you a picture of that here in just a second, of the actual chart. But that was a trade that lasted years. And entry into that trade was the upper 60s. And I ended up getting shaken out of this trade. And I'll show you where I got shook out of the trade. But I ended up getting shaken out of this trade at nearly $220 a share. So tremendous potential profits in trades like this. But we have to give up this idea of all the micromanagement if we're going to take longer term trades. Now, longer term trades don't have to go years. They can just go a few months. They can go just a few weeks. A few weeks would be a big stretch for a lot of folks. They can't think beyond 1 or 2 day trades. But what we want is that little bit longer term position that gets us that one entry and that really nice potential trade. Now, you can trade this with just stock, owning the stock, or you can trade these with option trades. Okay, and I'll show you, we'll talk about that as we go along here today. So I'm going to jump right on to some charts here. Here's a good example of a chart. This is SQ. Everyone's probably traded SQ a bunch of times. You can see here in SQ, I've got this all marked up. And by the way, this is on a weekly chart. And you can see how I've had this chart all kinds of, markings on here, trading this chart. And I want you to also view that these trades are not short-term trades. If you entered a position here on SQ, let's say you entered in here, right on this move, you can see that is in May, and you might have been stopped out sometime over here in July. Okay, so really simple, easy trades to follow, and the technical analysis is really just exactly the same as you would do for your short-term swing trading. How many of you feel like, so much of the time, a big portion of your account is just in cash? You're underinvested in your account. And the reason you're underinvested is because you understand that really quick swing trading has more danger in it. So you don't invest much of your account into the market. So typically you're always way underinvested in the market. Well, one of the ways you can solve that is looking for a few, you don't have to do a bunch of these, but looking for a few longer term trends, longer term trades. And the patterns here are identical to anything that we trade commonly in hit and run candlesticks, right way options, and any other trend trading strategy. And because we have new folks here today from Dallas, I'm just going to show you. I essentially trade two patterns in the market, and that's no joke. I've built a career, 14 years now, trading full time, supporting my family, trading basically two patterns on a chart that's this simple. I call this a naked chart. I really want to recommend everyone have at least one naked chart on their system. And this is the first place you go to take a look at trend, take a look at the price patterns. Okay? White background, black and white candles. Trust me on this, if you color up that chart, you will not see the patterns as clearly. Just go do an independent study out there and find out what your eyes are more capable of seeing. And you're going to find out it's black and white. I fought that for years. My mentor told me that. I fought it for years and years and years. Well, I have all these colors. Let me use all the colors. In fact, I made my charts look so psychedelic. By the time I was done, I patted myself on the back for my ingenuity and all the clever stuff that I could do with a chart, but it never made me any money. And when I cleaned things up and got simple in my trading, that's when things started to really change for me as a trader. It's what changed my life, is getting simple in trading. Giving up to predicting and just learning to follow the trend. Okay? A Grateful Dead chart. Yeah, I can show you one of my Grateful Dead charts. If you take a look at this, the two patterns that I basically trade are this. I look for a chart that's in a trend. Number one, guys, first thing first, trade a chart that's in a trend. It's the easiest thing. Don't try to pick the bottom. Don't try to pick tops. Trade a chart that's trending. It's the easiest thing in the world to do, and it was a statement that came to me when I was about ready to quit trading, and I was looking over charts, and I thought, how in the world could I be losing money when the market's trending like this? And it suddenly hit me like a ton of bricks. I was losing money because it was me. I was messing it up. I was doing all this stuff trying to predict and trying to be really fancy and all that kind of stuff instead of just following the trend. And the simple truth is there's no easier way to make money in the market than just finding a stock that's proving it wants to go up or down and just waiting for the next entry. Just be patient and wait for the trade. And enter that position and let the trade work. Now, why does this work so well? It works so well because we as retail traders do not determine which way a stock is going to go. The big institutions, the big dollars, are the ones who decide when a bottom is in on a stock or when a top is in on a stock. And if we give up the idea of predicting, we can see when they start to support a stock in the price action of the stock. We don't have to predict anything. All we have to do is follow. If they're supporting the stock and the pressure is on that stock to move in a direction, all we'd have to do is wait for our entry and follow it. We don't have to do anything other than that. We don't have to do anything fancy. We don't have to jump around to 14 different indicators and do anything like that. We just have to follow the price action. Price is king. So the two patterns I basically trade is I find a chart that's trending. Stock's moving up, I wait for the pullback to the trend and price support. If there's price support in here, all the better. Trend or price support. I only buy stocks that are at or near price supports. One of my number one rules. Buy stocks at or near price support. We call this in hit and run candlesticks and right way options a pullback opportunity, a PBO. And of course, they can come in lots of different forms. Okay? They can be a little bit choppy. They can be very concise. They can be all different kinds of things. But the only thing that really matters is that we see a buyer's reaction to price support or trend. And what I mean by a buyer's reaction, we see that bullish engulfing candle. We see that morning star pattern. We see that kicker pattern that moves things in the opposite direction. We see something that confirms that the buyers are supporting that level. And it gives us right here our lowest risk entry into a trade. Okay? Because our stop loss on this, we could be wrong on this trade, but we don't risk much money because our stop loss is right underneath that level. We don't lose a lot of money here. So second pattern that I trade, stock moves up, consolidates over, and then I wait for the buy signal. Okay, 99% of my trades are those two patterns. And I trade them over and over and over. Okay? Now, in a swing trade chart, it works exactly the same. Obviously, there's a lot more noise in a swing trade chart. You get a lot more back and forth and a lot more whipping around and those kind of things. In the weekly chart, or if you use just a multi-day chart, 2 or 3 day chart, it reduces some of the noise in that chart. By the way, this works identically, the exact same way if you're a day trader and trade 5-minute charts. It's the exact same thing every single time. I show this over and over and over, how simple it is to just follow the trend rather than try to predict it. Okay? So when you look at this chart right here, you can see what I'm talking about. Our trend, where does our trend begin on this chart? If we pull this back just a little bit more, I want to get a little more space in here. If we pull this back a little bit more, you can see up until this point in time, right here, we had no confirmation of trend. And why did we have no confirmation of trend? A trend begins with a higher low. That begins an uptrend. Yeah, that's right, Bob. This higher low confirmed an uptrend. There's our trend. Notice how that stock, for all of this time, used that trend all the way up. So you can see right here are the patterns. We move up, we consolidate over to the trend, and then buyers step in. We move up, consolidate over to the trend, and buyers step in over and over and over. So here's consolidations over, here's pullbacks to the trend. Same pattern, over and over and over. What we have to do as the trader is wait. We find this trend in place. We just have to wait for those buyers to step in. We have to wait for that buy pattern to occur so we can trade and follow this trend. Beautiful entry right there. Little weekly morning star pattern. And I want you to notice that these trades, whether you hold all the way through this or whether you swing back and forth in this longer term pattern, all of these trades that I'm pointing out here are winners. Every single one of these are winning trades. And all we had to do was follow the existing trend. Just follow along. Let the trend do what it wants to do. And follow along. And you can see some of these trades, if we look right here, here's a entry probably sometime in May. Probably stopped out over here in October. One trade, massive returns. And that's why I love some longer term trading. So how do you go about finding some longer term trades? Well, first off, one of the things that you want to, a pullback, Francis, pullback. the pullback opportunity to the trend. So we have a trend, PBO. We have the pullback to the trend. I'm looking for those pullbacks to hold support. PBOs and consolidations. I call this a pop out of the box pattern. Okay. If you guys want to know more about pop out of the box, I can show you that. We'll talk about it and show you how easy it is to use. Okay. It's a very simple, clean pattern to trade. So how do we go about finding these? Well, first thing is you have to slow down a little bit. Okay. Traders nowadays, I find they believe that the only way they can make money is go faster, 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 faster. I got to hurry, 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 hurry. I got to rush all the time. I'm here to tell you, if you're rushing into your trades, you're making a big mistake. You should never feel the need to rush into a trade. You are making a business decision whether this is going to be a profitable trade or not. Nothing about a business decision should mean rush to the trade. That's when you make mistakes. That's right, Steve. Wait for the trade, right? Go slow. Think about the position. Think about the risk. The biggest mistake you'll ever make in trading is just running in, blindly rushing into a trade. You have to let the trade come to you. You know, Charlie Munger has a quote out there. Charlie Munger's, Warren Buffett's right-hand man. Charlie Munger says the making money trading is not about the buying and the selling. It's about the waiting. The patience to wait for the trade. And that's what we're talking about here, is just being patient, letting the trade come to you. So you can see these pink lines here. I started changing all of my alerts to these pink lines so everybody could quickly identify them. I want you to understand that all of these lines back here, these were price alerts, where I literally was waiting for the trade to come to me. I see the pattern, I mark an alert on the chart, and I don't worry about it until that trade alerts. And it's when that trade alerts, I go take a look at that chart, and I'm ready to trade it. Because I've prepared for it ahead of time. I know what the pattern is. I know the chart is trending. And so all I have to do is wait for the trade. So how do we find these trades? Well, one of the things that I do all the time, and I'll show you this. And by the way, this is just one of the great benefits of TC2000. I think it's one of the great benefits. And I'm just going to use the diamonds here for an example. If I bring up a diamonds chart, okay, and then I click right here, one icon, I can bring up an entire list of everything that's in the Dow. And then all I have to do is flip through these charts. Okay? Now you're going to see that these charts are marked up. They're marked up for a reason. They're marked up because I'm always looking for that next longer term trade. Okay? So you can see right here in CVX, I have identified a downtrend break. Price has broken through the downtrend. Now, I don't chase into this move. Remember, I said we have to be patient. We have to wait for the entry into the trade. So the next step after this move, after breaking the downtrend, is for the stock to prove that it can hold here as support. Either with a pullback or a consolidation, it has to hold. It has to prove that they're going to continue to support that, not just pop through like we've seen up here, pop through and then turn right back around. Prove that you can hold. Once it proves it can hold, it gives me a pattern in here that I can trade. And I wait for those trades to occur. Okay, and you can see I've been doing this for a long time. Constantly marking up charts, constantly looking for those trade patterns. Okay? When you flip through charts like this, you're going to find great patterns that are potentially setting up. Everyone sees what's going on here in Apple. Apple broke its downtrend, rallied up strongly, and is now right here. You can see that little pink line. That little pink line consolidating over toward its trend. By the way, I can't make that up. The trend was identified right in here, right? I can't make that up. Consolidated about 3 weeks over towards trend and now has started to move on up. Not that hard, and you can see all the way through here that stock did exactly the same thing. Break downtrends, break the downtrend, hold it as support, buyers step in. Our trend is established, and notice how that trend continued to work all the way up. So just following that trend, following that chart. So I do a lot of just looking through charts. And by the way, I'm not looking for $5 stocks. Okay? Not looking for $5 stocks. I'm looking for, if I want to hold a stock for a period of time, I want a good solid stock, a stock that has good volume, consistency in its price action. I'm not going to be chasing around a biotech. Those are not meant for longer term trading. Okay. And by the way, guys, you can do this with ETFs just as easily. You can use an index ETF. You can use, anything and do the same, the exact same analysis here, and just follow those trends. Okay. Just follow those trends. So I'm looking for those stocks that are coming around, that are changing, that are turning into something, that are becoming something that they've overcome a downtrend. They've done something in here to prove a good price pattern. I'm going to show you a chart here in J&J, and this is an older, I'm going to go back to an old drawing here. This is something that I look for all the time. I'm always looking for those big resistance zones. Notice that J&J was held down here for years. Years. These are years down here. And then look what happened when it broke out. In fact, if I zoom this up right here, I show this every once in a while. Who wants to get into a trade where the stock goes for about 3 months? About 3 months, not one black candle. Not one black candle in 3 months. You guys can still hear me? All right. Yeah. Okay, good. When you look for the big patterns like that, you look for big resistance areas, those are the kind of moves that you make. Those are the kind of possibilities that are there. I'm going to show you a recent trade. And everyone that's here from RWO, you could sound off on this if you remember this. I mentioned to everyone on Lily this massive breakout that was coming here. Okay, that's the weekly chart. I found this trade on the weekly chart. And here's the thing, guys, it's not odd. Look at these big pullbacks. The first higher low, there's the trend. There's no big trick here. So I saw this great big resistance zone up here. I went to the daily chart, and right there, you guys can see that pink line. Right there was the first alert on Lily to to break us through that big resistance zone up there. And I want you to see what happened after that occurred and what's still going on right now. I think there's a problem coming in Lilly here soon, guys. Just by the way, see this big volume bump right here? I think it's reaching an exhaustion point. So be careful with Lilly here. I think it's overextending. We're reaching exhaustion on it. But there's my point. Good, an old, boring company. Not in the news. Never in the news except earnings days. And massive potential returns in a trade. Okay? Massive potential returns in a trade. And it's, if you want to trade this with options, all you have to do is enter your option trade. Let me give you a couple of rules that we use in Right Way Options and rules that I follow like a religion. Okay? If I'm going to enter an option position on Lilly here, I'm always going to be buying an option somewhere between 70 and 80 deltas. Always. Okay? Now that doesn't mean if I've got a 69 delta that I won't take a 69 delta, particularly if it's a longer term trade. Okay? If I'm planning this as a longer term position, I'm going to be looking out there 5-6 months plus in time for the option. Okay? I want to give enough time to take advantage of this trade. Okay? Now, here's something that I think is really, really important, guys. Because a lot of people think when you get into this long-term trading ideas that you never take profits. Okay? I have to take profits. I make a living from this. Okay? I have to take profits. So if I enter a long-term option position here, when that 70 delta option rolls up to somewhere around 90 deltas, I wait for the next entry setup into the trade, and then I close this trade and look for another 70 delta option taking a profit. Okay, on the next entry into the position. Okay, so I'm always looking to take profits. Long-term trading doesn't necessarily mean you do it without ever taking a profit. If you do this with stock, if you're following that big trend, this thing moves up, take some profits, wait for the next entry into the trade, and do it again. Or scale in and scale out. Take a position here. Let's say you go in with 500 shares here. By the time it's up here, you're down to 200 shares in the trade. Okay? So it all depends on the time frame that you're trading, but when I'm trading that longer term position, scale in and scale out of the trade. You have to take profits. If you don't take profits, there's too much pressure that builds up on the trade. And anybody that says that they held one position for, it went from zero to forever, either you're Warren Buffett or you're lying to me, because the pressure on that trade gets too big, and you better take some profits. You better scale out on those trades. Okay? And B, yeah, if I'm scaling out of a trade, or rolling my delta position, I'm usually rolling it up and out. So meaning I'm adding more time. You have to look at the option contracts. You never know what's the perfect. I know everyone wants to say, well, now you scale out. Now you look 3 months from now and buy another 70 delta option. That's not the way it works. You have to go into the option contracts and look for that next position. Mary, no. What I'm in any time type of long-term trade, I'm looking for that multi-month position. I'll be 6 months. I may even go to the leap options. I want that longer term trade. Okay, that longer term position. I have to give it enough time. Remember, we're looking at weekly candles here. I have to give it enough time to move like we expect it to move. If we buy too short a time on the option position, we're going to fail in the trade because the theta will get to us before we ever get a chance to make much money on the trade. So you've got to give it some time. Now here's something that I always run into when I talk to people about doing this. They say they get addicted to the really cheap option. Well, I can buy a 45-day option and it's only going to cost me $3.20. If I go out to the leap option, the January 2020 option, I'm going to have to pay $9 for the trade. I can't do that. Well, we just talked about the fact that your account is probably underinvested. Okay? As long as you can make a trade like that and keep it under about 3 to 4% of your account size, your overall account size, holding a few longer term positions in the long run will help you out because these will build great big profits in them at times. And then in your swing trading, if you have a bad day in swing trading, it's really not so bad when you have trades over here with lots of profit in them. Okay. And this stuff isn't abnormal. We did this in right way options on a trade in Microsoft. Let's see. There is the entry right there. Notice that's the same pattern I always talk about. Stock had pulled back, finally proved itself, and we ended up entering this trade here on a weekly. We entered that in December 2016. We ended up getting called away on the trade clear over here in August of 2017. We made a 99% return on the trade. 99% return on the trade. The only reason we ended up here is we got called away. We'd sold the call option against the position, got called away. We'd made so much money on the call option, I didn't want to buy it back. But we ended up trading this move a little bit later. Okay. Pretty simple stuff, just following those big trends. And those simple stocks, they're boring stocks. They're the stocks that nobody seems to want to care about anymore. They're the ones that are stable, that are just setting up these really nice trends. Okay, that chart that I showed on the first graphic was BDX. BDX. Here's the weekly chart. There was my entry into BDX. Consolidation right here that had lasted almost 2 years. And notice the rising lows the entire time for years and years and years. This thing was under massive pressure to move up. $2013. I got shook out of the trade over here. Okay, so I'm in this trade. right in here and out this trade up here. Now, guys, I don't want you to think that this is something abnormal. These charts are everywhere. These charts are all over the place. You just have to look for them. Okay? And one of the things that's happened, in today's day and age with all the instantaneous information and stuff, we've forgotten that there are great longer-term trades. For example, in here, you would not necessarily have to trade this and hold it all the way through. I know I didn't. I held pieces of it all the way through, but I was in this trade and I took profits in this trade. I added some in the trade. I sold off part of the trade. I waited for the next entry into the position, and I just continued to trade this trend. Okay, all the way up. The last piece that I had, like I said, I was shook out over here. Okay. When I say these trades happen all the time, they really do. Look at this Disney run. This was a 4-year run in Disney. Look what's happening right now in Disney. I'm sorry for all these lines up here. I'm going to switch this chart. You guys see what's going on here in Disney right now? Now, I will not assume that this will make a 4-year run if this breaks out of here and continues to move up. But I will assume after a multi-year breakout, we're going to have a substantial move higher. If it breaks out. If it can make that move. So it's happening all the time. We just have to retrain ourselves a little bit to look for that bigger trade. Now, couple things. What's an easy way to find these trades? An easy way to find these trades as well, doing what I just showed you, is just pulling up a list of charts, pulling up an index list of charts and going through and marking them up and looking at the big picture. And by the way, that's not wasted time. Okay? If you find this happening in a long-term trade, looking at a weekly chart, this has occurred right in here. We're moving up, held support, starting to move on up in a trend. Can you just switch to the daily chart and swing trade that? Yes. It's not wasted time. It's good time to be spent because it helps you see the bigger picture of the stock, of the trend of the market. Okay? So whether you trade these with stock trades or option trades, it's not wasted time. It's a good exercise, and I do this every week. I'm looking for the big trade all the time. I'm looking for the big picture. So don't look at looking at weekly charts as just a big waste. If you start marking out big things like this, can you see all I got to do here is just wait? You just got to be patient. That's the hardest thing about doing this, is the patience to wait for the trade. Like Munger said, it's not in the buying and the selling, it's in the waiting. It's in the waiting where the big profits are. Okay? So just going through and looking at charts and marking them up is one great way of doing it. Another really simple way is to, I'm going to go over here. I'm going to shut off this indicator. Is to take that longer term chart and just use a moving average crossover. Okay, you can see I've got a 17 EMA on here. By the way, the 17 EMA works really good on the longer term trends. See this period right in here? That 17 works really quite well. That's a 17 EMA moving average. It tells us when the downtrend is over, right? Tells us when the downtrend is over and buyers have started to pick it back up. Tells us when the downtrend is over and the buyers start to pick it back up. Okay? So if you want some help in running a scan to try and find these, Steve just mentioned the 8 on here, is take an 8 exponential moving average, put it on the chart, and look for the 8 crossing above the 34. Crossing above the 17. That 8 crosses above the 17. It gives us an early entry, an early idea. Doesn't mean that that is a trade. I want everyone to understand. Okay? A moving average cross is not a trade signal. A moving average cross brings you to a chart that might have a trade in it. We still have to evaluate the price action and wait for the next entry into the trade. Okay? So you use an 8 against a 17 and just run a scan, and you're going to find, if you do it on the weekly, or if you do it on a 3-day chart or something like that, you want a little bit longer, just not real long. You wait for that cross to occur. You wait for the next entry into the trade, and then just follow the trend. As you can see right in here, 8 crosses over, buyers step up in here, popping through that little resistance right there. That's sometime here in 2011, and that went over to here to October, November. One trade. October, from January to October. One trade. Okay? That's an easy way, other than just going through and looking at charts. It's an easy way to bring you to a chart that could be setting up. And that's the operative word. Could be setting up. Okay? And then we wait for the next entry into that trade. All right? Now, I saw a question went through, what do you do on trades like this around earnings? It's a good question. Around earnings. I showed you how we did it in how we traded Microsoft, right? And we traded that with a long-term option. Microsoft trade was a leap option. Okay, there was our entry. Microsoft was a leap option. Notice that's not even the tightest entry, not even the best entry. Didn't matter. We still made 99%. So how do we do that? Well, you want to enter those trades and let some profit build into the position. Okay? If you enter a long-term thinking trade and earnings is just a couple of weeks away, you're probably making a mistake. Okay? Because you don't have enough time to really build any profit into the trade. Okay? This is what I do on an option position, and it's what I do on a stock position as well. I wait until pretty close to earnings. Okay? And I make a determination. Do I still want to hold this trade? Is the trade continuing to look very stable, very strong? Do I want to hold the risk in this trade? So you have a choice. You can just take the profit. What I typically do, if I see a good pattern, the trend is still really good, is then I'm going to buy a front month option, put option, to protect the trade. Okay? So say, for example, if you have in this trade, if you have $2,000 in profits in this trade. Okay? Current profits being held a couple grand. If you go to the front month put, and why do I use the front month put? I use the front month put because I avoid the big implied volatility spike on those really short-term options. I don't want that big implied volatility spike. I want that option that it's probably elevated a little bit implied volatility, but it's not that big massive implied volatility spike. Okay? And I'm going to buy a put. I'm going to buy a put to put a stop loss in that trade to cover the position. Okay? If the stock moves against me, stock moves down sharply, okay, I can exercise my put, sell my stock, or get out of my position at the price where I protected it. It's an insurance policy on the trade. Enough to cover the position, Richard. I mean, if you have 1,000 shares, you're going to need 10 puts, right? If you're going to cover the whole position. Okay? Or you can do a combination of those. You could sell half of the trade, right? Take $1,000 profit. And then cover the other half with your put. Okay? Cover the other half and make sure it's protected for that earnings event. Stock moves down, you can exercise your put, close out your trade, you protected your profit. Okay? Stock moves up. You're right. Stock, the continuation of the trend is still there. The stock moves up. What do? Next morning or after the earnings event, go in, close that put option. You lost some money on the put option. But what you lost on the put option was made up in the move on the stock position. Okay, so you paid a little insurance cost to protect the position. The loss that occurs here will be very close to being made up by the increase in the price of the stock. Okay, so you're protecting your position in the trade. Now I'm going to do the same thing when I own stock. Let me give you an example. Current trade, long-term hold that I have right now. Some of you are going to look at this and say, what in the world is he doing? Everyone in Right Way Options knows this. I told everyone I was buying a long-term position in Walmart right here on that candle. I am still, and by the way, I bought the stock. I am still holding the stock of Walmart. Jerry, when you're buying your put for protection, it comes not so much about the delta as it becomes, what do you want to lock in for a profit? Your stop loss is always below current price, right? So it's usually going to be an out of the money or at the money option. You're locking in where you want that stop loss protection. So it becomes more about the strike price than it does the delta on that hedge position. Think about it. All you're doing is setting a stop loss where you're going to protect the trade. Okay? So I am still holding this position in Walmart. I own the stock. All the way up, I've sold call options against it. As a matter of fact, all the way up, everyone knows this in RWO, all the way up, when I see a good buy entry, I buy a shorter term option trade to enhance the position. So I have the long-term position, and then I put on a short-term swing trade to enhance the trade as it moves up. And it's also a hedge in the position. I'm selling covered calls against this trade, bringing more profit to the position. Now, when you look at this chart, you go, what a mess this has been right through here. And it has. It's been a terrible mess. Why would you hold that? Would you guys think it would be okay to hold that if currently I have better than a $10,000 profit in the trade? I know you're very short, Coach. You got to give up the micromanagement if you're going to do this. Who wants to look at their account and see a $10,000 profit sitting there waiting for them to take it? And that doesn't account for all of the covered call profits or any of the short-term swing trades in between. This is the long term. Okay? Folks in Right Way Options saw me do this with Home Depot. Right through here. Took a $10,000 profit on Home Depot. Okay? Guys, if you want to take, I'm giving you this as an example. I don't care if you guys think I'm wrong. I really don't. I don't care if you guys think, well, he is just a freaking idiot for holding that long. I don't care. I'm up 10 grand. I'm up 10 grand plus probably another $6,000 or $7,000 in the short-term trades that I've traded around this and positions I've taken out of it, like covered calls and things like that, since I started this position. So if you don't like the way I traded it, fine. What I'm trying to show you is it can be done. You may choose and say, hey, I'm not going to do this. I'm not going to hold through that. Perfectly fine. Perfectly fine. I don't care. Trade your trade. Do what you do. So you may not like how that turned out. Okay, fine. Make one long-term trade in here. Make another long-term trade in here. I don't care. This is for you. You trade this. What I'm trying to do is show you that you can make these long-term trades. That's the point of this. Not whether or not you like what I did or want to nitpick it to death. Fine, nitpick it to death. I'll still put my profits against yours. And I'm not trying to be mean here, guys. I'm just saying, stop. Stop all of this ridiculous thrashing around and chasing everything and thinking you can pick a top and pick a bottom. We can't, and we know that, and your account is proving it to you. So you trade your trade. If your trade tells you that, hey, up in here, I got to blow out of this trade, I'm not going to be in it. I'm telling you, if I traded this with options, I would have been out up here. I'm holding this stock. So I knew holding the stock, I have no expiration to worry about. I'm going to go ahead in this trade and I'm going to continue to hold this position and I'm going to sell covered calls against it and I'm going to continue to bring money to the trade the whole time. And by the way, I traded some puts in here as well to enhance the trade. Okay? So you trade your trade. And you follow your rules. But what you need to do is settle down. You know, brokers don't like to tell you this. Not many people like to tell you this. You know the most profitable trading strategy out there? Requires the least amount of work, the least amount of equipment. It's position trading. Yeah, it's position trading. That is the number one profitable position trading style in the market. But brokers don't like to tell you that. Brokers want to encourage all the quick day trading, the scalping, and all of that kind of stuff. And that's okay if you like it. It's okay. There's nothing wrong with that. I'm just telling you, when you're doing that, when you're scalping, when you're doing all that stuff, you're very underinvested in the market. You're missing out on the big trends. You're missing out on the big money that's out there. So if you want to continue to do that and just in and out and in and out and in and out, generating tons and tons of commissions for a few pennies here, $100 here, $100 there, no problem. But why not have some longer term trades that are putting in those really big numbers at the same time? That's all I'm talking about here. I'm not talking about changing anything up. I'm not talking about telling you that you have to change what you do. Do what you do. I'm just giving you an avenue and showing you that you can make really big money following simple trends. Okay? And it's not that hard. It doesn't require a whole lot of time and attention. You can do this from a laptop, looking at the market maybe twice a week. It doesn't require micromanagement of the position. Just let the trend continue to work. Okay? Take a look at 3M here. Always like to leave everybody with an idea. And not that I'll stay and answer questions, but leave folks with an idea. And I've brought this up to Right Way Options, folks. Do you guys see what's happening here in 3M? 3M breaking its longer term downtrend. Notice it's trying to consolidate and hold that support. The support right in here, the support of the downtrend. I'm waiting for the entry into 3M. I need some more long-term positions. In this choppy market that we've had here the last year, a lot of my long-term positions have kind of dried up and gone away. And so I'm looking for that next move. Like that. In 3M. Now, I don't know if that'll occur, but what I do know is it could be setting up. There's that 8 crossing over the 17. Now we wait for the next entry into the trade. Alfred, I think I'm just answering that question right now. Do I look for stocks that are just beginning a trend? Yes. I'm waiting for this. We've had the first move up. What do I need to confirm a trend? I need proof of a higher low and then a buy signal. I don't know where it will be, and I don't know when it will be, and I don't know what it'll look like if it does occur. But I know I can wait for it. And I know that if you do, it can pay massive profits. Downtrend. Massive profits. And all I have to do is wait and be patient for the trade. Okay? Wait for the trade. Mike T, an account of 10,000, you're going to have to be, you're going to have to be really, really picky about the trade that you take, and you're probably going to have to trade substandard positions. And what I mean by that is you won't be trading, you could trade one or two long-term options, but you're not going to be buying the stock unless you buy just a few shares of it, because it puts too much pressure on your account. Remember my rule, and this is a rule that I stick with: no more than 3 to 4%. Okay, of my account, and it's usually closer to 3%. I have to be really confident in the market to put 4% into a trade. So it's usually closer to here. Richard, a saying that I say all the time is dance with the one that brought you. So if you come to a longer term trade on a weekly chart, manage it on a weekly chart. Don't try to micromanage it with the dailies or anything that will shake you out of a trade. You won't be able to hold the longer term position if you do that. Manage it by the chart that brought you to the trade. So for example, if you happen, let's say I don't want to do a full weekly, maybe you want to do a 3-day chart. 3-day charts can work out great just as well. You can see right in here, there's that same price move on a 3-day. Then manage it by the 3-day. Okay? Whatever brings you to the chart, manage that chart. Why would a weekly trend be any different than a daily trend holding an option? Mike, you just buy a longer term option. Okay, I'm in a trade right now on Nvidia. That I've already hedged. I've already decreased my cost in this trade by a couple of options, and we've done that here in Rightway here recently. Did it on Friday where we did another hedge trade in this. We've already brought money into this position. Okay. I'm holding a June contract. Okay. I'm in AMD based on this weekly chart. Break the downtrend. Hold it as support. Buyers step in here. I'm holding this trade with the January 2020 contract. Okay, so I hold those trades just the same way, and I'm going to manage this trade just the same way. Do you guys see that this pattern right here is really not much different than this pattern right here? Move up, consolidates over, buyer step in. Move up, consolidates over, buyer step in. Same pattern. Move up, consolidates over, buyer stepped in here. Now we've had this little shake in the market. Can it move up from here? Absolutely. Why couldn't it? Broke its downtrend and it's holding it. If it doesn't work out, it doesn't work out. All right. but I'm following the same trade pattern that I trade all along. Kimberly, do I still use stops? Um, I think you know that I never enter a trade unless I know the risk that I'm taking in the trade. I never enter a trade without a stop. Oh, Mike. Oh, you're telling Mike. Yes, you always use stops. You always use stops. You always have to understand the risk that you're taking in the trade. Just because you go long term doesn't mean that you just throw all the rules out and blindly just throw money at the market. Right? You have to dig in and look at the price pattern of the chart, plan that trade, understand the risk, make sure the risk is acceptable before you enter any trade. And let me repeat that, before you enter any trade. Long term, short term, it doesn't matter. Plan the trade. Know the risk and understand it before you enter the position. Okay? All right. Now, here's something that I think is really important, guys. Okay, so I'm in this trade. I'm in this position. Am I comfortable in this position yet for a long-term position? No. I have to have focus on this trade, right? I can't just chase into this blindly. I have to have a focus on this trade because early on in the position I don't have a cushion of profit. Okay? Once the trade moves for me and gives me a nice profit in the trade, then I can really kind of relax. Okay? Stock has to give me that move first. It hasn't given me that move yet. Okay? If I start building this in here with huge profits in the trade, and when I say huge profits in options, they can easily be 70, 80, 100%. Then you can relax a little bit in the trade. But until that occurs, you still have to stay on top of this, right? You can't just forget about it. You need to have your stop loss in here. You need to be watching this trade. Okay? But after it starts to build that profit, now you can just take a breath and relax and just let the trade work at that point because you've built in a profit on the trade. You can even relax your stop loss. Give the chart more room to move back and forth because you got a nice profit in the trade. All right. Now, one of the things you guys see me do all the time, and I've done it in AMD, did it in NVIDIA. We entered that trade. The trade moved up a little bit, and what did I do? We entered the position. The trade moved up a little bit. What did I do? I went out and I sold March call options out of the money. I put in a covered call. It's a covered call, but on an option trade, they call it a fig leaf. Or if you're thinking long term, they call it a fig leaf. It's actually more of a diagonal or just a simple debit spread. Okay, so I sold the March contracts. Okay, sold those March contracts. Yesterday, we rolled that trade, right? We rolled that trade yesterday. Okay, because the stock gapped up, the market gapped up on us. All of these stocks moved higher. So I took advantage of that move. Let me give you the exact post that I sent out. By the way, anyone from Dallas, if you don't know this, you can download our app we have an app. Just go to your app store and search HRC Trading, and you'll see that these are posted on that app. When I did this on the AMD trade, I closed the March 27 calls. Okay, closed this trade, took an 82% gain on that trade. And with the gap up yesterday, I was able to sell the April 26 calls and bring in additional profit into the trade and hedge the overall trade. So, am I being careful with this trade right now? Yeah. I'm doing everything I can to protect the position. I'm bringing in capital. Okay, I've already reduced the cost of this trade by about $1.25 because of these sold strikes. So, am I managing the trade? Yes, absolutely. I'm paying attention to the position. I'm watching what's going on here. Now, I can relax a lot of that after the stock moves. If I get the stock to move up into here, pull back, hold a support level, buyers come back in, that trend gets really well established, now I can relax. I still want to manage it, but I don't have to watch this thing as closely, right? I'll let the stock move up again. I'll sell some more calls against it, out of the money. Continue to bring money into the trade. And by the way, I do that. You guys see me do that all the time. I let the stock move up first. It moves up first. Then I sell the calls. Because I get more for my calls and I get them further out of the money. So in all likelihood, we know how a trend works, right? It moves up and it pulls back, or it moves up and consolidates. So I let it move up, and then while it's pulling back or consolidating, I'm getting paid to wait by selling those options out of the money. Okay? One of my best trades of all time, highest profitable trades of all time. I think it was UNH. I don't have the marks on the chart anymore. But it was somewhere back in here. Taking a leap option on the trade. Trading calls against it. It was one of those stocks that was just moving very deliberately. It wasn't flipping around. It's not in the news. It's just moving very deliberately. Sold covered calls against it. Kept rolling my long-term option. Overall profit in that trade was well over 250%. Take care, Mike. Okay, that was one of my biggest profitable trades of all time. Okay, because it just worked out so smoothly and easily following that trade up. Okay, this is where you can put together, guys. This is where you can put together those 10, 15, 20, 25,000, 30,000, even more in profits in your account by just letting the trade work. It only takes one or two of those to really make for a great year or two in trading, right? So you don't have to rush into these trades, and don't think that you're going to find a good long-term trade today and just fill up five positions of long-term trades, over the next week. You're not going to do that. It takes time, just like anything else, time to build those positions in. Okay? Time to build those positions in. All right. Cool stuff. Well, 2017 was easy on anything. Didn't matter what you did. You could break all the rules in the book and make money in 2017. But we all know that's not a normal market, right? Those things occur very few times. Well, they've occurred very few times over my lifetime. Okay? The majority of the time the market is like this. It's challenging. Okay? And challenging markets are good times to have some long-term positions or longer-term positions because it buffers that daily swinging back and forth. Okay? Yeah, the first 2 months haven't been bad for this year, but we're still a long ways from being out of the woods. Okay? Francis, AMD, looking at that chart price action, where do you think my stop loss is going to be? If my entry was because of this bounce off of support, where do you think my stop loss is going to be on that chart? Where's the support in this chart? Guys, I have never ever changed the way I do this. I have never been ambiguous about this stuff. So where's my stop loss? Below that support. Not at the support, it's below that support. Because I want to let the stock, if it has to come back and test this again to bounce off of it, I want it to do it. And if I'm trading a daily chart, it's exactly the same. If I'm trading a 15-minute chart, it's exactly the same. Intel. Intel definitely has potential for the longer term. You can see I've got this thing all marked up. Let me shut off these moving averages here. I usually don't leave moving averages on this chart. I try to keep my chart very, very clean so I can look at the price action itself without all the distraction. Okay, so when you take a look at Intel here, you can see that Intel's broken through this resistance, right? We had a nice pattern in here. That nice W pattern moved up. Here's our first higher low in the trend, but it needed to break this downtrend. Okay, so now that we've broke that downtrend, we move up here. What do we do now? Well, now we wait for the next entry into the trade, whether that's a consolidation over the trend or a pullback or a test of this support. We wait for the next entry into that trade. And then, yes, I think Intel is all kinds of setting up for that longer term trade possibility. And you can see in the past, Intel can make these really great moves. Okay. There's that long-term trend. All right. So now that if this establishes itself out here as a good entry position, then yes, Intel could be a long-term hold position. But we wait for the trade. We don't try to speculate, we don't try to gamble, we don't chase. You know, one of the biggest mistakes I run into when I work with people individually on their coaching is we chase. We get caught up in this fear of missing out. We see this stock racing up here, and our first inclination is, oh my gosh, I'm missing it, and we jump in, only to suffer the pullback. I did that for years, guys. It cost me so much time and money, I hate to even think about it. But remember, we need the confirmation, right? What if this turns right around? We've seen that before too, right? Turns right around and comes right back down. Well, then it's shame on us because we chased into the trade. We have to wait for the next entry into the position. Yes, volatility does change, particularly around events like earnings and things like that, Richard. Again, if you're trying to manage a long-term trade based on the volatility, you're micromanaging to a point that you'll never be able to hold a long-term trade. Look at the price action of the chart. Follow the price action of the chart. And by the way, if you wait for the pullback or the consolidation, what happens to the volatility by the time you enter that trade? If it pulls back or consolidates over to the trend, you're usually buying it at a low volatility point, not a high volatility point. Okay. That's certainly a problem with folks who chase with options, is they chase that option and they happen to catch, kind of the double whammy there. Okay. Is that making some sense, guys? Now, I am in no way saying that you should quit what you're doing. I'm not saying, hey, if you're a scalper and that's how you make your money, don't change. Be a scalper, but maybe consider adding some longer term positions. If you're a swing trader, don't change that. In fact, keep up your skills, okay, in identifying and reading the price action for swing trades, but just slow it down a little bit. Take a look at a weekly chart. See what you can do with that bigger trend to add in a position or two every now and then, and build maybe a portfolio of 2, 3, 4, 5 longer term holds. You never know which one of them is going to pay off the biggest. You never know which one's going to go, for 3 months or for 3 years. You don't know. All you have to do after you enter it, though, is just relax and manage the trade. Don't micromanage the trade. Manage it by the chart that you found the trade on. Okay? And then just stay with the position. Okay? Now, for option traders, I understand, when you have to make that, you're used to paying those cheap options in that really quick type situation. It's a little bit of a different change over to think about buying that longer term option. It costs more money. Okay? Costs more money. But if you think about it logically, it doesn't really matter if you're looking at that longer term trade. It's still tremendous leverage on that longer term position, and it can make phenomenal profits. Okay? But if you struggle, if you constantly find yourself going to the daily chart, trying to micromanage it, and I see this all the time in swing trading too, guys. You buy a good daily candle on a swing trade, and then you're trying to micromanage it by the hourly and the 4 hour, and you're killing yourself doing it. Look at your account. It's proven to you it's not working. You over micromanage this. You stay too focused to the hard right edge. You don't pay attention to the overall chart or the pattern of the chart. and you're missing out. You're not giving yourself the opportunity that's there because you're so laser focused here. We'll enter a trade on right way options, and literally the first time it wiggles lower, I get questions, are you still in the trade? Because the only thing they're focused on is the hard right edge. They're watching that candle wiggle around intraday. Guys, that's a waste of time. You're wasting your opportunity as a trader. When you're in a trade, plan the trade, set the stop, let the trade work, and then do your job. Find the next trade. If you're wasting your time watching that thing wiggle around, you're missing out on all the opportunities around you. Over micromanagement has become such a terrible problem for traders that they're making their own losses occur because they're not letting the trade work. Is there anyone here that would admit that you sell a position right before the stock moves up? Right? And it's almost worse psychologically when that happens, isn't it? You entered that position, you maybe chased into it or something, the stock pulls back a little bit, you panic, you close the trade, you look back the next day or two and the stock is way up. And you go, come on, again? That's not the market's fault, guys. That's our fault as traders. And I'll tell you the number one reason that occurs. The number one reason that's happening to so many people in the market is they're not planning their trades. Someone said this is a trade and they pile in. They don't even think about the risk. They don't know what the risk is. They overtrade the position. They do all of these stupid mistakes. And then the moment it pulls back, oh my gosh. Because they don't take the time to plan the trade. I'm going to say this again. I said it at the beginning. If you ever feel rushed to get into a trade, you're making a mistake. You should never feel rushed to get into a trade because you will make a mistake. And the rushing itself is a mistake because you won't take the time to properly plan. You won't take the time to understand the risk of the trade that you just entered. And that is the number one reason why people are micromanaging these things, because they have no plan. They don't know what they're doing with the trade. They don't know what the total risk to their stop loss is. They may not have even set a stop loss. And consequently, they're always subject to emotion in the trade. There's no business sense in it at all. How many of you, anyone in the right way options can answer this, how many of you think that if you worked for my trading firm and I walked up to your desk and asked you how things were going, and you showed me a whole list of trades that you have made without a plan, how long do you think you'd be working for me? And that's no joke, guys. That's no joke. You need to be that kind of boss to yourself. I'd take you out and buy you a blizzard as a severance for firing. That's funny. You think about that for a second. Are you being that tough boss, or are you continuously subjecting yourself to poor decisions because you're trading emotionally, not trading as a business? Okay? You have to settle down, and you have to slow down, and you have to work at being more mechanical in your trading. It doesn't matter if it's short term. I don't care if you're a day trader. If you're a futures trader, if you're a forex trader, it's all the same, guys. The chart, the price action, it's all the same. But if you're not doing the job, and the job is finding that trade, finding that trend, waiting for the entry, planning that trade, understanding the risk before you enter. And what happens when you find a trade that the risk is too much? It's a beautiful setup, but the risk in the trade is too much. What do? You find another trade. That trade is not for you. You find another trade. I find trades like that almost every single day. Trades that have great setups, good everything, and I look at the chart and I look at the risk and I say I can't take the trade. It's too much risk. Not going to take it. Almost every day I find those. But it's my job to determine the risk and the plan and how I hold to my set of rules. And if you start breaking those, if you don't have those rules, if you're just rushing all the time. And by the way, I've learned this from experience, guys, because early on in my trading, I made these mistakes. I was constantly, I felt like at the end of the day, I had just gone like 15 rounds with Mike Tyson. I was exhausted. And all I did is I felt like I rushed all day long. I couldn't keep up. And you know what I was doing? I was chasing everything. Chasing. Everything that popped in the market, man, I was chasing it. Didn't have a plan. Just got hurry up. Get that. Oh man, look, that thing popped up. Never once considering the risk. Chasing. And guess what? For about 15 of those years, I stunk up the place as a trader. Actually, it wasn't quite that long, because I finally started to build an account and went full-time 14 years ago. Been trading about 30 years now. And I'll tell you exactly what my mentor told me. I went and sat down with her. I was struggling. I was frustrated. I went and sat down with her. This is a person who had never had a job her entire life. The only thing she'd ever done is traded. Okay? She was the original one that originally taught me what to do. So I'm struggling, I'm frustrated. I finally get a chance to go meet her. This is back where I would actually drive to her place and we'd sit down and she'd say, okay, let's take a look. Where did you enter this trade? And I would say, well, somewhere around here. Okay, where's your stop loss? Well, somewhere around here. Or the one that would really tweak her is, well, it was just a mental stop right in this area. And we did that for several charts and went through several of those. And you know, she didn't say you're fired, Thomas. She looked at me and she said, Doug, I didn't think you were stupid. That's exactly what she said to me. Doug, I didn't think you were stupid. You couldn't have hit me harder with a 2-before. Because she was right. I was screwing it up. I knew the rules. I wasn't following them. I knew what I was doing was wrong, but I continued to do it. Repeating the same thing over and over, hoping for a different result. And she was exactly right. I wasn't following any of the guidelines. I was trading emotionally. I was chasing everything, and it cost me years and lots of money. When you settle down, when you slow down, when you focus, when you put a plan together, when you trade that plan, trading becomes a lot easier, guys. It really does. It becomes a lot easier. Whether it's a short-term trade, a long-term trade, it becomes a lot easier. Because there is no rush. We know that if a market is going to run up and you happen to miss a trade, say this pulls back and you miss it and it takes off up here. Do you chase that? No. You wait for the next entry into the trade. These trends, I've shown you trends like SQ and Microsoft and stuff that can go for long periods of time. If you miss an entry, wait for the next entry. Follow the rules. Be disciplined. If you find an entry that looks great but the risk is too much, wait for the next entry. It might be better. You don't have to rush. You don't have to chase. The market will be here tomorrow and it'll be here the day after that. Wait for the better trade. Be more diligent. Be the tough boss. Be that boss that walks over and looks over your shoulder at your trading desk and says, "Now, why did you do that?" Okay? And it will improve your trading. I promise you that, if you stop the rushing and the micromanagement. Okay? Even in short term, let's go to, let me show you something here. I'm going to go to the diamonds. We know the diamonds have been kind of choppy here recently. If we go to a 15-minute chart, are there trades in here that we could trade following this same plan that I told you about? Even on the day trade basis, this is a 15-minute chart. Stock gaps up in the morning. Okay, what do? We wait for the next entry into the trade. Okay, where does the trend prove itself? About right in here. Winning trade. The money wasn't made from chasing into this, because what happened to those folks who chased into this in the morning? They got stopped out here. At a loss. Wait for the trade. Wait for the setup. It doesn't matter if it's long or short. Wait for the setup. Move up. We pull back, rally, and then we show failure. There's your short trade. The same pattern every time. Every time. Just following the trend, whether it be up or down. Not chasing the trend, not rushing into the trend, waiting for the next entry into the trend. Works on 5-minute charts, 15-minute charts, works on hourly charts, 4-hour charts, daily charts, weekly charts, works on all charts. But we've got to be patient and wait for the trade. All right? Hopefully that was helpful. A little bit of coaching there at the end of the today. Hey, Dallas, I want to thank you. Dallas Fort Worth, thank you very much for being here today. Do appreciate it. Hope you guys got something out of this too. Um, think about taking a look at some of those longer term trades because it can really help enhance your profits overall and give you a little bit of security or comfort in your swing trading because we take away some of that really fast trading and have that cushion as we build those profits in those longer term trades. Kind of helps bring some balance to your portfolio. Okay. Anything, you guys, of course, Right Way Options will be open Monday. The trading room is now open all day long for the chat side of it. I'll be on the mic there and live in the room 2 hours every day. So when you have questions, please bring those up. And if you have questions on longer term trading, please bring those up during those times. I'm going to ask you guys a favor. I know there's folks here from Dallas Trading Group that may not know this. But Mary, if you could pass this along to everyone, if you guys could do me a favor and subscribe to my YouTube channel. Every day I put out a morning preparation video to try and help folks get prepared for the day. That's every single market morning. I'm at my desk at 5 a.m. every day to get that out and write a blog every single day to try and help traders prepare for the market. It's free to everyone. So please consider going over there. And besides that, there's just tons and tons of training on YouTube that might be useful to you. So if you could do me a favor, I would appreciate that. Just subscribe and make sure you click that bell when you subscribe. It'll be a pop-up bell. Make sure you subscribe, click that bell because then you will be notified when I post a video. KG, send a private message to Mary McAfee. I'm sure she would be happy to give you the details of getting into the group. So everyone, I want to wish you all a fantastic weekend. Take care of yourselves. Stay warm. We'll see you right back here Monday morning in Right Way Options.